Bookkeeping is a fundamental process in financial management that involves the systematic recording, organizing, and tracking of an organization's financial transactions. This comprehensive essay aims to provide a detailed understanding of bookkeeping, its significance, and the methods used for effective financial recording. Starting with the definition and purpose of bookkeeping, we delve into the various bookkeeping methods, including single-entry bookkeeping, double-entry bookkeeping, and computerized bookkeeping. Additionally, we explore the principles that underpin sound bookkeeping practices, such as accrual basis accounting, consistency, materiality, prudence, and completeness. The essay also covers essential bookkeeping processes and tasks, internal controls, documentation, and the impact of technology on bookkeeping practices. By gaining a thorough understanding of bookkeeping, businesses can ensure accurate financial reporting, informed decision-making, and compliance with legal and regulatory requirements. Things inside. Introduction. 1.1 Definition and purpose of bookkeeping. 1.2 Importance of bookkeeping in financial management. 1.3 Objectives of effective bookkeeping. Bookkeeping methods. 2.1 Single-entry bookkeeping. 2.1.1 Definition and overview. 2.1.2 Application and limitations. 2.1.3 Transaction recording and classification. 2.1.4 Financial statements preparation. 2.2 Double-entry bookkeeping. 2.2.1 Definition and overview. 2.2.2 Principles of double-entry bookkeeping. 2.2.3 Chart of accounts. 2.2.4 Recording transactions, debits and credits. 2.2.5 General ledger and subsidiary ledgers. 2.2.6 Trial balance and financial statements. 2.3 Computerized bookkeeping. 2.3.1 Introduction to computerized bookkeeping systems. 2.3.2 Benefits and challenges. 2.3.3 Software selection and implementation. 2.3.4 Automation of transaction recording and reporting. Principles of sound bookkeeping. 3.1 Accrual basis accounting. 3.1.1 Definition and comparison to cash basis accounting. 3.1.2 Recognition of revenues and expenses. 3.1.3 Accruals and deferrals. 3.1.4 Matching principle. 3.2 Consistency. 3.2.1 Consistent application of accounting policies. 3.2.2 Changes in accounting policies and disclosures. 3.3 Materiality. 3.3.1 Materiality concept and significance. 3.3.2 Materiality thresholds and determination. 3.3.3 Impact on financial reporting. 3.4 Prudence. 3.4.1 Prudence concept and its role in decision making. 3.4.2 Provision for expected losses. 3.4.3 Conservatism in accounting. 3.5 Completeness and neutrality. 3.5.1 Complete and unbiased recording of transactions. 3.5.2 Avoidance of omissions and distortions. 3.5.3 Independence and objectivity of bookkeeping process. Bookkeeping processes and tasks. 4.1 Source document management. 4.1.1 Importance of source documents. 4.1.2 Examples of source documents. 4.2 Journalizing. 4.2.1 Journal entry format and components. 4.2.2 Recording transactions in journals. 4.3 Posting. 4.3.1 Transferring journal entries to general ledger accounts. 4.3.2 Subsidiary ledgers and control accounts. 4.4 Trial balance and adjusting entries. 4.4.1 Purpose and preparation of trial balance. 4.4.2 Identifying and correcting errors. 4.4.3 Adjusting entries for accruals, deferrals, and estimates. 4.5 Financial statement preparation. 4.5.1 Income statement. 4.5.2 Balance sheet. 4.5.3 Cash flow statement. 4.5.4 Statement of changes in equity. Internal controls and bookkeeping. 5.1 Importance of internal controls. 5.1.1 Preventing fraud and misappropriation of assets. 5.1.2 Ensuring accuracy and reliability of financial information. 5.2 Segregation of duties. 5.2.1 Roles and responsibilities in bookkeeping. 5.2.2 Separation of recording, authorization, and custody. 5.3 Documentation and record keeping. 5.3.1 Documenting policies and procedures. 5.3.2 Retention of financial records. Impact of technology on bookkeeping. 6.1 Automation and AI in bookkeeping. 6.1.1 Benefits and challenges of technological advancements. 6.1.2 Role of artificial intelligence and machine learning. 6.2 Cloud-based bookkeeping solutions. 6.2.1 Advantages of cloud-based systems. 6.2.2 Data security and privacy considerations. 6.3 Blockchain and distributed ledger technology. 6.3.1 Potential applications in bookkeeping and accounting. 6.3.2 Security and transparency benefits. Conclusion. Please note that the above provides an outline of the main sections. Let's discuss bookkeeping, methods and principles for effective financial recording. Introduction. Bookkeeping is a fundamental aspect of financial management that involves the systematic recording, organizing, and tracking of a company's financial transactions. It serves as the foundation for accurate and reliable financial reporting, ensuring that businesses can monitor their financial health, make informed decisions, and meet legal and regulatory obligations. This essay aims to explore the concept of bookkeeping, its importance, the methods used for effective financial recording, and the principles that underpin sound bookkeeping practices. Understanding bookkeeping. A definition and purpose. Bookkeeping, the process of recording and classifying financial transactions. Purpose, to maintain an accurate and complete record of financial activities. The importance of bookkeeping. Financial management. Provides insights into the financial health of a business. Decision making. Facilitates informed decision making based on accurate financial data. Compliance. Helps meet legal and regulatory requirements. Taxation. Supports tax planning and compliance. 2. Methods of bookkeeping. A. Single entry bookkeeping. Definition and overview. Application and limitations. Transaction recording and classification. Financial statements preparation. B. Double entry bookkeeping. Definition and overview. Principles of double entry bookkeeping. Chart of accounts. Recording transactions, debits and credits. General ledger and subsidiary ledgers. Trial balance and financial statements. C. Computerized bookkeeping. Introduction to computerized bookkeeping systems. Benefits and challenges. Software selection and implementation. Automation of transaction recording and reporting. 3. Principles of sound bookkeeping. A. Accrual basis accounting. Definition and comparison to cash basis accounting. Recognition of revenues and expenses. Accruals and deferrals. Matching principle. B. Consistency. Consistent application of accounting policies. Changes in accounting policies and disclosures. C. Materiality. Materiality concept and significance. Materiality thresholds and determination. Impact on financial reporting. D. Prudence. Prudence concept and its role in decision making. Provision for expected losses. Conservatism in accounting. E. Completeness and neutrality. Complete and unbiased recording of transactions. Avoidance of omissions and distortions. Independence and objectivity of bookkeeping process. 4. Bookkeeping processes and tasks. A. Source document management. Importance of source documents. Examples of source documents. B. Journalizing. Journal entry format and components. Recording transactions in journals. C. Posting. Transferring journal entries to general ledger accounts. Subsidiary ledgers and control accounts. D. Trial balance and adjusting entries. Purpose and preparation of trial balance. Identifying and correcting errors. Adjusting entries for accruals, deferrals, and estimates. E-financial statement preparation. Income statement. Balance sheet. Cash flow statement. Statement of changes in equity. V. Internal controls and bookkeeping. A. Importance of internal controls. Preventing fraud and misappropriation of assets. Ensuring accuracy and reliability of financial information. B. Segregation of duties. Roles and responsibilities in bookkeeping. Separation of recording, authorization, and custody. C. Documentation and record keeping. Documenting policies and procedures. Retention of financial records. VI. Technology and future trends in bookkeeping. A. Automation and AI in bookkeeping. Benefits and challenges of technological advancements. Role of artificial intelligence and machine learning. B. Cloud-based bookkeeping solutions. Advantages of cloud-based systems. Data security and privacy considerations. C. Blockchain and distributed ledger technology. Potential applications in bookkeeping and accounting. Security and transparency benefits. Conclusion. Bookkeeping plays a vital role in the financial management of businesses, providing accurate and reliable information for decision-making, compliance, and financial reporting. By adopting appropriate bookkeeping methods and adhering to sound principles, businesses can effectively record and track their financial transactions, ensuring transparency and accountability. Embracing technological advancements and staying updated with future trends in bookkeeping will further enhance the efficiency and effectiveness of financial recording processes, enabling businesses to thrive in an increasingly digital and interconnected world.